In today's world, credit is a fundamental part of our lives. Think about it. Whether you are swiping a card for groceries, paying bills online, or booking a train ticket, credit facilities play a crucial role. Understanding how credit works is essential. It is the first step towards taking control of your financial future. This knowledge empowers you to navigate the financial landscape with confidence. Most people dream of owning a home or buying a reliable car. For many, saving up the entire amount in cash is almost impossible. This is where credit steps in as a powerful enabler. A home loan or a car loan allows you to acquire these assets much sooner. It bridges the gap between your savings and your aspirations. So, what exactly is credit? It is a promise. You receive something of value now and promise to pay for it later, usually with interest. When a bank gives you a loan, that is credit. When you use your credit card to buy a new mobile phone, that is also credit. The entity that provides the money or goods is called a lender, and you are the borrower. Now let's talk about your credit score. This 3-digit number acts like your financial report card. It tells lenders how likely you are to pay back borrowed money based on your past financial behavior. A higher score means you are considered a lower risk. Having good credit is like having a superpower in the financial world. It opens up a world of possibilities and makes your financial journey smoother. When you have a good credit score, lenders see you as a responsible borrower. This means you are much more likely to get approved for loans and credit cards. Imagine wanting to buy your dream home. With a good credit score, your home loan application sails through the approval process. You might also be offered a lower interest rate, saving you lakhs of rupees. Now let's consider the flip side, the challenges of bad credit. A low credit score can feel like a heavy weight, limiting your options. If your credit score is poor, you will likely face rejections when you apply for loans or credit cards. Even if you do manage to get credit, it will almost certainly come with very high interest rates. This makes borrowing very costly. Section 4. Inside your score. The 5 pillars of creditworthiness. Understanding what goes into your credit score is the first step to taking control of it. The most significant factor is your payment history. This means whether you have paid your past debts on time. The second crucial factor is the amounts owed, or your credit utilization ratio. This looks at how much of your available credit limit you are using. The third factor is the length of your credit history. Generally, a longer credit history is better. The fourth component is new credit. Section 5. Building a strong foundation, actionable tips for better credit. How can you build good credit or repair a not-so-good score? The most important tip is to pay all your bills on time. This includes your credit card bills, loan EMIs, and even utility bills if they are reported. Late payments are one of the biggest reasons people have low credit scores. Set up automatic payments or reminders for your due dates. Secondly, focus on keeping your credit utilization low, especially on your credit cards. Aim to use no more than 30% of your available credit limit. Thirdly, be mindful about opening new credit accounts and closing old ones. Only apply for credit when you truly need it. Finally, make it a habit to regularly check your credit report from all major credit bureaus. Section 6. The marathon, not a sprint. Patience and consistency in credit management. Building good credit or repairing a damaged score is not something that happens overnight. It is a marathon, not a sprint. It takes time, consistent effort, and a whole lot of patience. If you have made some financial missteps in the past, those negative marks will stay on your credit report for a certain period. However, their impact lessens over time, especially if you start demonstrating responsible credit behavior. The key is to develop good financial habits and stick to them consistently. Paying your bills on time every month, keeping your credit card balances low, and avoiding unnecessary new debt. These actions will gradually improve your credit worthiness. Think of it like planting a seed. Your credit score needs consistent positive actions to grow stronger.